For this Monday's business brief, we're joined by Nicki Hutley from Deloitte Access Economics. Nicki, what do you make of the reaction to the election result at the weekend? Auction sales were up, I guess in line with the market as well. Last week it was up. What's your take on the overall reaction to the coalition's win?
Well, it seems kind of like people have had jumped in with both feet into the market. I'd be very cautious, though, of saying that this is directly correlated. I mean, we'd seen some increases in auction clearance rates happening for quite some weeks now. The fact it's got a 6 in front of it, of course, is very encouraging for the market, unless, of course, you're a first home buyer, in which case it's not so much. I just advise some caution, but certainly people do seem a little bit more optimistic. And as with a slightly improving auction rate that we've seen, the rate of decline in house prices, particularly in Melbourne and Sydney, has also slowed. So if this is the bottom of the market, though, it's people still maybe not remembering that it's only 15 or so months ago that we were going all throwing our hands in the air and going, we have a major housing affordability crisis. And if anything, you would have expected investors to be jumping in the market on an ALP win so that they could have those grandfathered provisions for negative gearing and capital gains tax. So it doesn't entirely make sense as to why people think it's a better time to get in now. But maybe that's the overall optimism of the market, as you pointed to, also equity markets saying it's a good thing we've had a return of this government, more of the same, no nasty surprises, and we know what to expect.
The volatility does continue, though, doesn't it? Certainly in the equity markets, we've seen that out of Wall Street with the ongoing trade war, and there's really no sign of that being resolved just now. It's worsening, if anything.
Well, that's exactly right. And there's all sorts of evidence starting to come through in the numbers of how this is also hurting American consumers and businesses. In fact, how it's actually weighing on sentiment as well, but actually the real economy as well, which is a deep concern. But, the US economy was always bound to come off these very big growth numbers that we've seen over more recent quarters. And in fact, the Federal Reserve last week, indicated that they were expecting the US economy to return to more normal levels, and that means around 2% growth, which is no bad thing for the US economy. But it also suggests that we've seen the end of rate hikes for the FOMC, Federal Reserve in the US, and I think that's that will help steady markets a little bit, I think. But, as long as this tit-for-tat war is going on between Trump and Xi, and one minute it's getting better, the next minute it's getting worse, markets are just having knee-jerk reactions to that. But there's that underlying current that things are not quite as well as they were in the US economy. Much like Australia, things are not so good, but that's not to say we're in a dire position. We've just got slower growth at that sort of 2% level or so. And, of course, we'll find more news in the week ahead as we head in towards our next GDP number the week after.
Indeed, Nicki, and I look forward to chatting to you next Monday. Thanks, Nicki Hutley from Deloitte Access Economics.